Dharmesh Mehta as well joins in on the show right now then. Dharmesh, hi, good afternoon. Good to have you on the budget. Dharmesh, metals, cement, capital goods. I guess the infra, focus on the budget is something that's going to at least keep this segment of the market extremely lively and happy.
Yeah, honestly, people were expecting this will be a growth budget because people were really, the only way to come out of this entire, 2 bad years was to thrust the economy and get the jobs back and capex heavy budget, which thankfully has happened. So, which is a huge positive. There's a big thrust on the manufacturing sector, which is going to, I believe, 2022 will be a manufacturing year for India. So clearly government has helped them by the PLI scheme, which were announced earlier, and now the thrust coming back in budget. So the metals, because of road construction or infra spend, you're going to see metal, cement stocks, or those kind of businesses were getting much better, kind of focus, and maybe the profits will be far superior than what people expected.
Dharmesh, you've been keeping pretty busy being the banker for many IPOs that we've had in the last year, and I'm sure many in the year ahead as well. Just takeaways from new age digital companies, considering, this budget in that sense as well was pretty new age, very, sort of forward looking. But given the market construct and given the kind of shake off that we've had in the IPO market, if I can call it that, what do you think is going to be the market construct for, these new IPOs, which are, about to hit the markets in the year ahead? And do you think that froth in valuation, budget or no budget aside, just looking at the market construct right now, some semblance of sanity is going to get back to that, space in terms of, the valuations, or for that matter, even the subscription numbers and the kind of pop and the heady valuations that these companies were quoting?
Aisha, IPOs will continue to happen. The valuations can correct. I believe these new age sectors that we all talk about are here to stay. Many of them are disruptors, so things will change forever. So it's not like one-time event or one kind of bullish cycle event. So a lot of businesses which are real disruptors, game changers, will continue to do well and survive and get equity money. Valuation will be the key question. Any new sector when it comes to the market, especially such a large sector like digital, will take its own time to stabilize and where the real valuation will be established. So you will have some few kind of hiccups coming on the way, and some of them may continue to do very well. I think so. There is clear-cut good demand for this kind of companies, whichever people believe will last long, and eventually valuations will settle down. But the interest is definitely there. So I don't believe the IPO should be a problem, but it will be a selective bunch of IPOs which will go through. And not to forget, without digital, besides digital, there is a huge pipeline of money raised to happen this year. So I believe the good part of this entire budget is there's nothing in the budget will shake their confidence. So all the IPOs will sell on their own merits and valuation, and there is enough liquidity available for those companies.
Some of those names are quite active in today's trading session. Afternoon, Dharmesh Avan joining in as well. Now, while there was a lot of emphasis on growth, one can't ignore the high inflationary backdrop. And while, yes, there was an amount allocated for the hospitality sector within the consumption space, we were speaking with Sanjeev Mehta a while ago, and he did acknowledge that there could have been some direct intervention when it came to consumption in the budget. How are you looking at what was announced for the consumption space, and would you say it was a bit of a disappointment?
See, honestly, we wanted every sector to get something or the other in the budget, which is obviously not possible. Government has limited resources, and the thrust to be there where there is a maximum impact, especially to enhance more jobs and employment. I think so. This budget has done good enough for manufacturing sector, which will actually result in higher jobs, and hopefully the economy reviving will lead to the consumption demand. Rather than budget-led consumption demand, it will be more economy-driven consumption demand. So the consumer sector should benefit when the economy starts reviving with the kind of efforts the government has made today.